Well, big growth predicted for 2018, and Nicole just talked about GDP. A lot of people predicting big, strong fourth quarter GDP. So how's this all going to impact your wallet? To market watchers, Stefanie Miller, Gary Kaltbaum, and Francis Newton-Stacy. Let me start with you, Francis. Right now, I looked at the New York Fed, and they're looking at 3.8% GDP growth for the current quarter. That would be 3 quarters in a row, 3% plus. I think you got to go back to 99 to find that. Maybe I'm wrong. You couple that with all the other evidence, and it feels like this economy has a very strong headwind going into 2018.
Yes, I think so. It all depends on the Fed. It depends on the rate at which the Fed tightens rates, and it depends on how quickly they reduce the balance sheet. We've got a lot of strong earnings. We are at 99% of the valuations, and for the economy to justify those valuations going forward, money has to stay strong in circulation. If the Fed reduces the money supply, that's going to change that projection. It's like taking the credit card away.
The Fed is going to take action, though. No, are you saying is any action, or is it just what could the Fed do to scare this market when the market anticipates the Fed hiking rates 2 or 3 times?
Well, I think investors are just waiting for a news piece. I think they're waiting for some drama out of the White House or something to materialize to be the catalyst for a sell-off, right? Everybody's just hanging out here at the top. And the minute there's some kind of news piece or something, it's going to start the selling, and that's what's going to create the sell-off. Technical traders know that the selling should have already occurred, and so people are just waiting for that catalyst to appear.
Stefanie, some people have been waiting since March of 2009 for, quote-unquote, the second shoe to drop. They've missed an incredible rally, a rally of a lifetime. The people watching this show, folks watching this show who are invested in the market, what should they be concerned about?
You know, one of the things we look at Height is tax reform, and we are pretty bullish on prospects that the Congress and President can be completing tax reform this fourth quarter. That seems like it is pretty much priced in. The market seems to be kind of pricing in perfection, is what we say. If Congress can't get that done, if things get delayed or don't happen, we think that there will be some market implications for sure.
Gary, you have always been one of the more practical market watchers I know. Even when you're really afraid, if you see momentum, you make people money. So that's one of the reasons I'm glad you're on this panel, because there's some dyna-wool bears. I don't know what they've done in the last 8 to 9 years. But again, the rubber meets the road. What are you most concerned about? And what would be the signs for you that maybe this time we could get that pullback or correction?
Well, first off, I'm not worried about central banks because they're scared. They're worried about any drop in the market. And it's not just us. You have Japan in negative rates, Europe in negative rates, and they're still printing money. So the matter of easy money around the globe is still over the top ridiculous. Look, right now, whenever the transports weaken, the retail strengthens. Whenever something weakens, the technology starts moving up again. So we're in this great positive rotation that I'm seeing on a daily basis. When that changes, I'll start worrying. We are not seeing any leadership breaking down. Semiconductors, which have been leading this market since '09, is the strongest in the market I have seen since 1999.
Right.
Eventually, that's going to change. But right now, I am not seeing it, and I think you go with it. And now you have a seasonally strong period into the end of the year.
Francis, the top 10.
Hey, I just have to say, that's all well and good until the banks start to anticipate the fact that the Fed's going to tighten and the banks are going to get out of their positions first. The volume in that selling is going to turn everything over despite the positive news.
So you really believe that? Because I got to tell you, one of the
2007.
reasons the banks have been underperformers is they've been terrible traders in this market. Maybe it's a lack of volatility, but I'm not so sure that the smartest, quote-unquote, smartest guys in the room, Francis, have been right.
Can I just inject something on that? What are they going to tighten to? 1.25%, 1.5%? Fed fund rate should be at 4% right now. So we're just continuing this ridiculous, easy monetary policy. And the way
Gary,
the Fed is reacting, if we get a 5% drop in the market, they'll get scared and start printing again. So I'm not too worried about central banks again. I'm more worried about valuation, which is up in the trees. That can cause it. But as of this second, I'm a big interpreter of the market. I'm not a predictor of the market. I see nothing that tells me anything's in big trouble here. If it starts next week,
right,
I'll deal with it. But so far, so good.
Let me specifically focus with you guys on this critical tax reform bill, because everyone's kind of alluded to it. And Stefanie, I'll go to you first on this, because
sure.
you know, we saw Obamacare fail. That was low-hanging fruit. It was something the American public wanted to happen. You say low taxes, and you wonder who could be against that. And yet, we know that there's a razor-thin margin of this going through. So what happens if it fails?
Certainly not good for the market. I think that's a low probability option. I think Republicans, the word desperation has been used multiple times. I think they are desperate for a win, as they should be.
You know what, though? You got a lot of guys who aren't going up for re-election. You have a lot of people who are sticking to their guns. You have a lot of people who went against the administration on Obamacare repeal. So logic may dictate everything you're saying makes sense, but what we've seen in the last 60 days or so makes people concerned.
That's fair. I think the one thing to keep in mind is that congressional Republicans have wanted their opportunity to reform the tax code since they regained the majority in 2010. This is not necessarily just a presidential Trump priority. This is Congress's priority. So it really does argue for them to get something done quickly. Even by the middle of this month, I think we're weeks away potentially from President Trump signing a bill into law.
Francis, I want to skip the Fed for a moment and talk about valuation, right? Because we've had a huge run in this market. And I was going to ask you this earlier about the top 10 stocks since President Trump won election. All of their forward PE ratios have gone up. Some of them have gone up dramatically. By the same token, 5 of them are paying tax rates significantly higher than 20%. Which one would matter more? If we did get a 20% corporate tax rate, would that make you feel better about some of these companies that have seen soaring PE ratios?
It would. But the thing is that what most people don't think about, and as a technical analyst, when you're up at these high valuations, you're far above fair value, and you stretch away from fair value like a rubber band. And the propensity increases the farther you go into these super high valuations that rubber band is going to snap back. I do think that it will take a catalyst, such as tax reform, such as some sort of repatriation of the money, such as some sort of thing, in order to justify these valuations going forward. I agree with you there, Charles.
All right, Gary, what do you see on valuations? You worried about it?
Well, absolutely, but I have to tell you, growth rates are very strong. I was looking at Facebook today at what guidance is for next quarter. Another 70% increase in earnings. We're talking some big stuff there. Amazon, everybody's worried about. They're growing sales 30 to 40% and are dominating their space. I'm a big believer in owning the great companies with the strongest earnings and revenue growth. And even if valuations are what considered to be high, for me, it's what investors think. Right. And investors are bidding them up right now. And until that ends, I go with it. And I think Amazon was up another $30 today based on how strong they're going to be for this quarter.
It's been working, that's for sure. Guys, it was a fantastic conversation. Thank you all, and I hope to see you soon. Hey,